Together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
At the Bank of Antandek, mortgages are on the menu.
I was in the chippy last night, and it hit me.
Go on.
We should give all our new mortgage customers £1,000 of spuds.
Potatoes?
Yeah, jackets, roasties, dolphin wires. I mean, what's not to love?
Hey, yeah, we could call it Mashback.
Genius.
Meanwhile, at Santander, they're giving their customers £1,000 cash back on selected first-time buyer mortgages. See what's possible at Santander.
Lending subject to status and criteria. Cashback given on completion and repayable if mortgage closed within 2 years. Offer can be withdrawn. Your home may be repossessed if you do not keep up repayments on your mortgage.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
People have always told me I can be a bit wary of modern things.
Very true.
So when Jane suggested selling the house with purple bricks, I weren't happy.
No, you weren't.
You see, I don't like technology. I don't like the internet. I don't like moving house. I don't like their adverts. I don't like purple.
Luckily, I don't listen to him, and our estate agent Emma were perfect. She gave us her actual mobile number. She was always available.
Fine, they were great. Still don't like purple.
Purple bricks. You'll be totally sold.
Fixed fee payable on instruction or after 10 months. Viewing services cost extra. See website for more details.
Right now, the future is being written by people like you. Creative thinkers, tech lovers, problem solvers. Are you going to stand by and watch? Well, show the world what you've got. Join others around the UK on an EY degree apprenticeship in digital and technology. And earn a salary working with exciting businesses while studying towards a degree. Don't let the future pass you by. Get involved. For more information and to apply, search EY Digital Apprentice.
Stock markets here in Europe beginning a brand new trading session after gains yesterday that took the European benchmark to its highest level since January 2018. Now, some of the gains have also continued on the US markets and in Asia today. And what we've seen, a lot of appetite for stocks based on hopes that there might be some resolution to this ongoing US-China trade war. And the message from US President Donald Trump yesterday was that he expected to sign a significant part of that trade deal with China ahead of schedule. Still no messaging on the exact timing of the pen to paper on a deal. However, investors did push up stocks. The S&P 500 again closing in, hitting a fresh record. We saw that in session. Asian markets climbing to their highest level in 3 months. And stock markets here in Europe picking up on some of that news today. Fairly evenly split, bit of green, bit of red as we move throughout the session, although we're just now tipping a slightly weaker by about 0.1%. The other big factors around the Fed, whether we get signals about further easing and a rate cut delivered this month, the expectations for the market, or whether there's some disappointment. Also, numbers coming out later this week on GDP and on the jobs front. So that could be somewhat market moving for investors as we also wade through the latest on Brexit and a general election in the UK. So significant event risk. And let's just peel into some of these sectors and see what's gaining, what's losing at the start of the sessions and weigh up all these different events. Don't forget, investors have been contending with much of the same dialogue around trade and Brexit, uncertainty around all of these different fronts. Most of 2019 is what we've had to deal with. Banks at the bottom, 1/3%. Just outpaced now by healthcare, sliding by about 1/3%. Healthcare has been trying to recover some of its losses on Wall Street and, in fact, having not a bad month so far, which is what we've seen for those major indices, on pace to break a 3-month losing streak so far. But this morning in Europe, just a tad weaker. Utilities towards the bottom end of the charts, one of the underperformers, along with industrials. Curious as we talk about some of that trade optimism that's been in the price for stocks. Technology slightly weaker. We had the likes of Alphabet reporting late yesterday. Investors raking through those numbers. The revenue a beat, but earnings a miss. Chemicals on the flat line. Insurance stocks also trading flat. Basic resources up by about 1/10%. Glencore, Anglo American, some of the top performers in that basket. Travel and leisure, though, getting a bit of a nudge into the green. EasyJet among the top performers, TUI and Lufthansa in the mix. Let's get into what we're seeing on the individual markets. And for the UK, 73.19 is where we sit at the moment. It's been a slightly challenging trade for the FTSE over the course of this month, with all of the Brexit news around extensions and whether there's going to be another vote for the people. The monthly trade, the FTSE is down 1% as we push lower again this morning, another 0.1%. In contrast, the DAX has actually been gaining this month. It's been up about 4%. So it has been a much firmer trade than the UK market. Slightly inclined positive this morning, going with the Spanish market. Elsewhere, if you're looking for losses on the boards or move away from the flat line, it's the SMI, and some of those healthcare losses are probably explaining the outside move to the downside for the Zurich stock market, 0.2 on the back foot. The earnings. Big focus for us this morning has been BP, which has beaten on its third quarter earnings expectations, despite posting a sharp drop in net income as the oil major was hit by lower crude prices in the quarter, weaker production and one-off charges. The company posted underlying replacement cost profit of $2.3 billion. BP had flagged up to a $2 to $3 billion charge earlier this month as it prepares for a $10 billion asset sale by the end of 2019. The reaction you can see, somewhat cautious in the stock price this morning. Now, speaking to CBC earlier this morning, BP CFO Brian Gilvray said the company is getting closer to the end of a sweeping overhaul.
We're about two-thirds of the way through now, a major rebuilding of the company. If you think what we laid out in 2016 as our sort of strategy, we've now got two-thirds of those projects on stream and producing. They will ramp up and continue to ramp up through into next year, into 2021. And then we have a series of targets in 2021, which is basically set to generate significant free cash flow in terms of versus the amount of cash that we're spending around our capital program. So while it's difficult in terms of what's going on with US, China, demand has definitely got softer this year. We came into the year, demand was growing at 1.3 million barrels a day. By the middle point of the year, it dipped to 1 million barrels a day. Now it looks it could be as low as 900,000 barrels a day, maybe lower. That is pretty much being driven by the whole issues around China-US trade tensions.
There you go, the CFO of BP. Johannes Bernini joins us, chairman of JBC Energy Group. Johannes, good morning to you. I mean, some interesting points that Brian's making there about where he thinks the energy price is going to go for the rest of this year. Is he right on your reckoning about the softness of demand running into the end of the year and into 2020?
Yeah, this year doesn't look good. I mean, we put the number at 800,000 barrels a day growth for this year. Next year, probably going to come in around 1 million. So overall, the market is looking sluggish, right? That's not a big surprise. It has slowly filtered through in the market. The IEA this year had to revise the numbers down from 1.4 million now towards 1 million. So slowly everyone realizes demand growth is not the driver, yeah? At least not upside. Having said that, the market has more upside. Right now, we are coming into the time of the year where demand is relatively strong for crude oil. You will see a lot of refining buying in Asia happening. So short-term, prices are now above $60. You may see them going towards 70. Yeah? So that's a short-term element that's going to support you for companies like BP.
Now, the major question for the oil major is just translating into what this means for equities. The major question is around energy transition, and not only which companies will be able to adapt, but how quickly they'll be able to adapt. And Brian Gilvray was fairly defensive of the actions that BP is taking. Do you think that the oil majors are actually working at the pace they need to, given the momentum behind the public backlash and the investor backlash around oil markets?
Well, first of all, yes, I think they're absolutely on top of the game, right? Why? Because still for the next years, 10 years, we will have oil demand growth worldwide, right? So you can't do without the oil companies. What you may see with all the public opinion building up is that people may be afraid to invest in oil. That then will lead to a lack of investment. That then leads to much better returns for those companies that are invested. Because remember, when security of supply is not there, people start crying, you know, and then they need it most, and then prices may go up. So I'm quite optimistic. But the reason why they look good is because they have done their homework. When oil prices came down 2014-15, what they really have done is cutting their costs. When you speak to Bob Dudley, he will tell you, look, we have managed to bring our costs down into the 50s, and that's where they still make a good return, you know, so around 10-15%.
thinking about the BP numbers, you've got oil up at 16% year to date, WTI, but you've got natural gas down 15% year to date. What's going on in that dynamic?
Well, this year was dramatic on gas. We see a lot of the U.S. gas coming out into the market. You see a lot of the LNG export facilities that came online, and right now the U.S. is pushing everywhere. Now, when you look at it, there's only one way to go, that is the European storage. Now, that has been filling up. We're now above 95% full. Asia doesn't have storage so much, so they're not able to absorb out-seasonal supply. China is a big buyer, but they are not able to absorb so much when they don't have the inventory. So while demand is growing, and you see a lot of countries moving in this direction, you need storage and you need cold weather, and that's not yet the case.
We had a fascinating chat about Saudi Aramco with the CFO of BP, and he was fairly honest talking about the impact of liquidity on the market, another major player coming in to try and attract investor money. What do you make of the choices that will be presented to investors when there is now another major player likely to be in the market?
First of all, I think that's a country risk that you are dealing with here, which is where you have to take a view. I think that if it's
so that's number one. That's the criteria.
That's number one overall. Let's face it, where the country is. Oil, yes, sure. It's going to be a reasonable return. You have seen the numbers from Aramco. They're looking fantastic. It's a well-run company. But again, bear in mind where it is. Bear in mind the transition they're going through and what that means in terms of stability for the country. It's a challenge, right? Now, of course, the country has its pluses and minuses, but I would say the problem with the valuation is at the end of the day, when you're putting it too high, the investor is going to eventually have a sour reaction to that, and that's not going to be helpful for anyone.
It's been an interesting 2019 coming out of last year, where we were asking questions, I think, this time last year about the ability of OPEC to bring discipline back to the price. Do you think they've successfully achieved that as we run into the end of the year?
Absolutely. I mean, let's face it, they have been cutting more than what they were supposed to cut. Saudi Arabia has been cutting about 500,000 barrels a day more than what their own target was. Next year they will have to cut again. But again, when you purely look from where they are right now, where they have been overcutting, the additional cuts they need to do for next year are not so much. As long as they and Russia stick together, the market is going to have a good defense on the downside. If they don't, if they don't stick together, you may see briefly $40 before again, the talk will bring it up. Yeah, but right now, market looks very, 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 very good for them.
Is shale production a big factor here, and is it slowing?
Shale production has completely changed the name of the game because, remember, historically always had cycles. Overinvestment, then market came down, and then again, lack of investment. Right now, you can switch on and switch off shale. So it's purely a matter of price, and when the market is at $60, you have more investment. If it's more at 50, you have less investment. So you have right now a bit of a slowdown in the growth rates. We still have huge growth rates, but we are already beyond the peak, right? So now, this year, we have a higher rate than next year, and so you will see now a slowdown in the growth rates in the U.S.
And I just want to come back to the point you made about Russia and Saudi Arabia, and I know going into last year's OPEC meeting, their relationship was really front and center, given that they'd really agreed on the cuts before the actual OPEC meeting took place. Now, Putin made his visit to the kingdom, first visit in more than a decade. How is this affecting the overall OPEC dynamic?
Well, look, initially, I think that Putin was playing the Saudi card a little bit opportunistic, and he felt like, let's give it a try, because they never loved each other, right? Today, he's the king in the Middle East. Yeah, let's face it. He has completely outsmarted the U.S., and, you can see it everywhere, the way he's playing it. It looks like, without him, nothing works. So right now, it looks like they are more and more moving together. The Saudis need the Russians, of course, because otherwise they do all the lifting themselves, which you don't want to do. For the Russians, doing a little bit, maintaining still a higher price is good for them, but it's easier for them, right? The Russians only need to defend $40 or maybe $45, $50. The Saudis wish to have 70, which is very difficult to achieve. So right now it's working for the Russians very well.
Johannes, good to see you this morning. Thanks for coming in. Johannes Bonini, chairman of JBC Energy Group. Let's get back out to Karen.
Thanks, Jeff. I want to take you to earnings reaction for Orange, the French company. Shares are sliding down 1.5%. Keep in mind, though, the 3-month performance still solid. The stock has been up 6% over the course of that window of time. Now, sales at the company grew in the third quarter, boosted by greater demand in the Middle East and Africa. Growth in those regions outweighed weaker demand in France and Spain. The French telecom telecoms operator confirmed its full-year outlook and declared an interim dividend for 2019. Meantime, to Deutsche Börse, and it has reported a 10% jump in third quarter net profit as it got a strong boost from strong trading in derivatives and power and gas markets. The German exchange operator also backed its targets for the year. However, on an earnings per share basis, Deutsche Börse missed expectations due to rising operating costs, and that's impacted the share price performance today. Meantime, to Commerzbank, in the German banking sector, we're seeing a pop in the share price, about 1% higher. It has posted a 35% rise in third quarter net profit. The lender beat expectations boosted by cost cutting, while it also added more customers and grew its assets. The German lender is due to publish its full results on the 7th of November. Swedbank today is officially under investigation from Estonia's financial regulator. The authority announced it has opened the case after finding evidence of a misdemeanor at the troubled lender's Estonian subsidiary. Swedish authorities have said they will consider sanctions against Swedbank over the matter. The result of the probe is expected early next year. Just a quick snapshot on the share price, down more than 2% now in reaction to the news, taking its 3-month picture slightly lower, still positive by 3%. Coming up on the show, the S&P 500 hits a fresh record high. All eyes on whether that number can be topped.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, alright.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
She did it! Her first word! Go on, say it again for Mummy.
Nada.
Mama.
Oh.
Savings. Did you hear that?
Savings account.
Teaching your kids how to save may not be this easy, but you can get them learning good habits and skills from an early age, thanks to the range of children's savings accounts from Yorkshire Building Society. Just another example of real help with real life. Find out more at ybs.co.uk.
In cinemas November 15.
So you're going to build a car to beat Ferrari?
With a Ford. Correct. Get ready for Le Mans 66.
They hate guys like us because we're different.
Starring Matt Damon and Christian Bale.
What are they doing? Making your car go faster. That's more like it!
Based on the incredible true story.
You got a plan? It's high risk.
Of Ford versus Ferrari.
No, I thought the whole point was to win the damned race.
Le Mans 66.
Hit it.
In cinemas and IMAX November 15.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Washington is considering increasing some tariff exclusions on Chinese imports worth $34 billion, according to the Office of the U.S. Trade Representative. The exemption on the goods is currently due to expire on December 28th. The USTR recently said both China and the U.S. are close to securing a Phase 1 trade deal. The U.S. Federal Communications Commission, meanwhile, is planning to restrict American companies from buying equipment from Huawei and ZTE with government subsidies. The proposal, which designates the companies as national security threats, will be voted on next month. The Chinese firms will be able to contest the partial ban if it comes into effect. And let's take a look at U.S. markets and where things stood in the U.S. yesterday. It was a positive day overall. The S&P 500 closed at a new record high. Investor optimism really coming together around that U.S.-China trade rhetoric and also Fed rate cut expectations as the central bank heads into their two-day policy meeting.
Yeah, okay, let's bring you back in on this. Very interesting. You were talking about sentiment, and you're talking about sentiment. If sentiment is improving here, if I want to get leverage to that sentiment, should I be going back into emerging markets at this point?
Emerging markets have actually done quite well. If you look at China, the market's up 23%, 24% year to date. Emerging markets outside of China are only up 10 to 12% year to date. It's been hit very, very hard by what's been going on with the US dollar, which is ridiculously overvalued at the moment. We would look to see the US dollar gradually weaken as sentiment improves. And if that happens, that is really good for emerging markets and capital flows. And of course, the emerging market story is a domestic story. And if China is the main player within that field, then we are positive.
But there are some walking wounded that worry me. You look at Argentina now and the fact that they've reintroduced capital controls. Obviously, Turkey has raised a lot of concerns about governance, particularly as it focuses on the central bank. And wherever you look, there do seem to be one or two countries within blocks that are struggling at the moment. Some of that may be down to the pressure, as you say, from the stronger dollar. But I thought these countries were all getting their houses in order when it comes to managing their own finances.
Clearly not when you look at Argentina, but Argentina isn't really a big investable market when you look at pension funds in the US or the UK and how they look to get exposure to markets. There's obviously very localized areas that you need to avoid, but when you start talking about emerging markets, everybody's really thinking about China, India, Russia and Brazil, and their outlook looks more positive. It's a domestic growth story though, rather than an export-led growth story, which investors stay focused on.
Yeah, I want to challenge the notion of US dollar weakness because there have been 10 reversals so far this year. 10 false dawns for investors. And when you mentioned walking wounded, I thought you might be talking about some of those US dollar traders. They're calling the end of the strength of the US dollar. The argument still exists that the Fed, even though it might be cutting this week, will still be ahead of other central banks, supporting a differential argument, particularly if the ECB has to embark upon some other form of easing down the track. And then if you look at other central banks, Bank of Japan as well, perhaps there could be more easing from that central bank. So therefore, just purely based on the economic story in the United States, there's an argument still to be supported for the US dollar, isn't there?
Absolutely. The thing is, the dollar trade and the strength we've seen in dollar has been driven by negative sentiment. It's been the ultimate safe haven. Investors go out and buy the US Treasury 10-year, and that's what they've been focused on. The reality of this is...
go to risk, though, because we've seen all-weather currency. When you risk off, you buy the US dollar. Risk on, you buy the US dollar. So again, why do you think the weakness is coming?
Risk on tends not to be a US purchasing trade in the same way as risk off is. And also the other thing to bear in mind is that the US dollar is very overvalued on a PPP basis. So if you look at it versus the euro, it's about 18% overvalued. If you look at it versus sterling, despite a recent run in sterling, it's 10% overvalued. And you look at the yen, it's around 5 to 6% overvalued as well. Investors have been very comfortable holding the US dollar. It's a negative sentiment trade. As things improve, you start to see flows outside of the US back into Europe, back into Asia in quite a meaningful way. And that's what we think we'll likely see over the next 6 to 12 months.
Now, coming back to Europe, we've got the ECB resuming their bond buying starting this Friday. What kind of impact are you expecting to see on bond prices?
It's really difficult with yields so negative at the moment in Europe. It can't be good news for bond prices, bearing in mind we've seen the equity markets jump around 8% on that announcement. We was looking at what's actually happened since Draghi has come into power. We've had 2.6 trillion euros of stimulus through bond purchasing into the system, which is incredible. That's the size of the UK economy that's actually gone back into markets to help support things. Europe with negative rates, those rates aren't being passed on to outside of the banks. They're keeping rates flat, so that puts a lot of pressure on European banks, margin compression, so that's quite negative. The outlook for Europe, despite the change in terms of Lagarde coming into power, is still a bit rocky in our view.
So you guys are still underweight Europe, I see. That's from an equity perspective.
Correct.
If we do see the different national governments take up Draghi and Madame Lagarde's call for more fiscal spending, do you think this is going to be enough to change the narrative when it comes to European corporates and then in turn European equities?
I think you need to see two things happen in Europe in order to stimulate growth, which is what we're talking about. But remember, Europe is still growing to the tune of around 1.8, 1.9% year on year. The first thing that needs to happen is fiscal spending, as you've suggested. We definitely need to see signs of austerity ending and fiscal spending in the way that US and China are actually spending money. The other thing that we need to see is bank lending, and that is really hard to see when rates are negative and at 0% in terms of what banks are doing. It's hard to see growth improve in a meaningful way at the moment if banks are not lending, and that's why we're remaining cautious.
And coming back to earnings season, in terms of what we've heard from European companies, it feels as though results have so far been not as bad as investors feared. But a lot of that comes down to expectations and companies already managing investor expectations lower. What have you taken away from what we've heard from management, in particular the commentary on outlook?
Outlook is absolutely crucial as to what's going to happen in 2020, without a doubt. Also, revenues, more so than earnings, far more important. We've had a lot of share buybacks announced, which helps support the earnings number, but cost cutting across the board is very, very evident, particularly in the banking sector, which we've just touched on. Revenues to us is key, and we've had revenue numbers in the order of 3.6%. Expectations were around 2.6%. We know that the numbers had been brought down in terms of earnings announcements for this quarter. However, much better than we thought we would see, which gives us some hope that things are likely to improve, be it gradual.
Yogi, you've got an opportunity, it seems, in the UK. We know it's an unloved market. You know the UK market quite well, though, and you know the fundamentals. It is over-discounted, isn't it, around Brexit? There is an opportunity here, surely.
Yes, absolutely. Sentiment has been really negative. The UK is still growing at 1.4%. Remember, when you buy the FTSE 100, most of your revenue exposure is actually US dollars in the US. We're very confident that the UK will improve. We didn't think it was in that bad a shape with Brexit going on for the last 3 years. So as soon as you get clarity, things will start to improve. There's a lot of support provided by the fact that sterling is 10% undervalued on a PPP basis. That will help exports. But again, the fundamental story, the domestic growth story, foreign investment back into the UK, we see as positive catalysts once we remove the uncertainty of a no-deal Brexit.
If we have an election somewhere between the 9th and the 12th, which seems to be the running at the moment, and the Conservatives get a sufficiently large majority to be able to push through their own Brexit plan, would you see that as a positive?
Yes, definitely. Again, it removes the uncertainty of a no-deal Brexit. It encourages corporations to start investing again, particularly in the UK. The caveat to this is that you will likely see sterling strengthen as it approaches PPP levels, but we're expecting quite a sharp move. That will dampen the enthusiasm for strong earnings numbers, but the overall environment will definitely be more positive.
When you talk about the uncertainty that would be alleviated if we do get a deal to come through in the next 3 months or so, but that is just the beginning of Brexit. This idea that Brexit is done and dusted once we get the withdrawal agreement agreed and the official leaving. So is it really realistic to expect companies to immediately switch on and begin investing heavily again?
You make a good point. The effect won't be immediate, but sentiment is definitely much better than it was 3 months ago, 6 months ago, 12 months ago, and that's encouraging for corporations when it comes to investing in the UK.
Can I ask you quickly about UK property? Because we were chatting off camera that a lot of investors have been chatting about appetite for housing here in the UK, and there's some murmuring that maybe stamp duty would be tackled by Boris Johnson in any election. So far, £477,000, the average house price in the capital. Tax on that, about almost £14,000. Do you think this is going to be an election promise, an election policy?
It could well be. There isn't a single client meeting that I go into where UK real estate is discussed. It is a very hot topic. It is the ultimate safe haven. To us, it still seems and feels very beaten up, and investors aren't putting money into the property market in the way that...
In fact, you've got international investors like those in Hong Kong who might be looking to park their money elsewhere. You'd think it would be a natural home, wouldn't you?
You would, absolutely. But Brexit uncertainty has put a lot of foreign investors off. The balance is, of course, sterling is very, very weak, and so that encourages inward investment. But we just haven't seen the numbers come through in terms of transactions. So from our perspective, UK real estate, the ultimate safe haven. It's much safer than an asset class such as gold. But of course, until we start to see significant flows from international buyers back into the UK, we're unlikely to see the market do anything meaningful.
Yogi, good to see you this morning. Thanks very much for coming in.
Thank you.
Yogi Duan, the CEO and founding partner of Hassiam Asset Management.
Well, coming up on the show, Boris Johnson takes another stab at a Christmas election. Just what we were asking for. This after lawmakers vote down his plans, but will the opposition parties get on board? More when we return.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Then it was time for glow-in-the-dark mini-golf. I got a hole in one. Well, 3. I'm a bit rusty, okay? There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
I tell you what used to be fair, lunch. You used to walk past pubs and just see people laughing and merriment. What happened to those cheery days? I tell you what happened to them. It's been replaced by a pint glass sitting by a computer full of condiments, plastic cutlery, and a pair of chopsticks you use for fishing the noodles out your keyboard. It's just not fair.
At TalkTalk, fairness is important. That's why, unlike some other providers, we offer fixed price plans on our fibre broadband for the entire length of your contract. Search TalkTalk Fibre. Fairer broadband for everyone.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
Charge linked to a multi-billion-dollar asset sale pushes the oil giant to its first quarterly net loss in more than 3 years. CFO Brian Gilvory tells CNBC the U.S.-China trade war is weighing on the oil major.
Demand has definitely got softer this year. We came into the year, demand was growing at 1.3 million barrels a day. By the middle point of the year, it dipped to 1 million barrels a day. Now it looks it could be as low as 900,000 barrels a day, maybe lower. that is pretty much being driven by the whole issues around China-US trade tensions.
Shares in Orange also in the red as a slower growth in France and Spain caps sales growth in the third quarter. Alphabet shares fall in extended trade after Google's parent company misses profit estimates in the third quarter as rising costs outpace a strong performance in ad sales. And UK Prime Minister Boris Johnson loses his third attempt to force a snap election, but vows to try again while the EU agrees to a 3-month Brexit delay. European markets retreating a bit after 6 days of gains. The Stock 600 currently down about 0.4%. We've got a number of corporate earnings coming into focus today, kicking off last night, of course, with Alphabet's earnings and the shares reacting negatively at first to those results. And now this morning we've heard from BP, Orange, a whole range of sectors. And investors are pausing for breath, it seems, after the positive mood yesterday, which was supported in large part by U.S.-China trade optimism, as well as earnings coming through in the U.S. And all of this, of course, coming as we await the Fed decision tomorrow and whether we get a hawkish cut from the central bank over in the U.S. Let's take a look at the different sectors and see what the split looks like this morning. Red across the board, so no sector trading in the green this morning. At the top of the board, though, we've got the more defensive sectors. Food and bev basically are hovering around the flat line. Real estate down about 0.13%. Healthcare, travel, leisure, and insurance round out the better performers this morning. But of course, in the red, nevertheless. Basic resources down about 0.9%. Financial services, telecoms, and oil and gas round out the worst performers. But no sector trading above 1% higher, 1% lower. So overall, the moves contained. And of course, Brexit uncertainty factoring in as well as we await the next steps as Boris Johnson vows to try yet again to get his support for his call for a December election. Taking a look at the individual stocks, let's see what the major movers and losers are this morning. Fresenius leading gains there, up about 4.5%. Down at the bottom, it's a fairly mixed picture. One stock I would call your attention to, Royal Mail. Shares are down about 4%, and that comes as JP Morgan cut their recommendation to underweight. But the overall picture, modestly lower for European stocks, despite a record close for the S&P 500 yesterday. Guys?
Thanks very much. Boris Johnson is set to make another attempt to hold an election on the 12th of December. The British Prime Minister will put forward a new short bill that only requires a simple majority to pass. This after he failed to gain the backing of 2/3 of MPs during yesterday's vote. Meanwhile, Johnson has officially accepted a flextension from the EU, but urged the bloc to make clear that a further delay would not be possible. Willem is with us around the desk this morning. So just to clarify here, we're not doing special programming at the end of the week then? Is that what this boils down to?
I think that's a very
lot of folk in the gallery will be relieved to hear that.
It's interesting because, of course, this was his do-or-die promise that October 31st would be the date that Brexit happens. We saw £100 million, $130 million spent on advertising to make people aware of this. We saw lots of money spent on commemorative British currency being minted. That's now being melted down, apparently. So a lot lost in terms of the Prime Minister's confidence, maybe, in this issue. In terms of what happens next, we had him attempt last night to, for the third time, get a general election on his terms. He was defeated. He didn't get the 2/3 majority required under 2011 legislation. Today, he's pushing an idea that has been proposed already by two small opposition parties. It will require just a simple majority. It is therefore much more likely to happen if they can find a compromise on the date of the election. The government wants the 12th of December for an election. The smaller parties would like one on the 9th of December. They say that's because it reduces the amount of time left open to Parliament to push this Brexit deal through. And the Liberal Democrats and the SNP, the two parties that proposed the 9th of December over the weekend, of course, entirely opposed to Brexit altogether.
Anyone listening to this conversation and all the other ones we've had on the channel know that Brexit is a dominating factor. But what is the chance that domestic policies carry some sway if there's an election?
I mean, that's a really good question, and it's really difficult to answer because a lot of the criticism of holding an election ahead of a, say, second referendum is that all of those other issues that would normally be a big part of a general election election will be secondary, because people will be very much focused about how they can stop Brexit, how they can make Brexit happen. In fact, one of the organisations pushing to prevent Brexit is already talking about huge amounts of data mining to make sure that people can vote strategically and effectively just around the single issue of preventing Brexit. So then when you start talking about investment, talking about policing, talking about healthcare, are people going to pay as much attention to that as they might normally?
Or 4-day working weeks, which we can throw in. Labour with
this up at the moment. This is a live shot of cabinet members turning up this morning. Do you recognise him?
Cold autumnal.
That's putting you under pressure. But there you go.
In the blue? Who's that?
Here we go.
It's a fairly fit group, 2 out of 3 wearing their running gear, it seems.
What's interesting, of course, is, the Cabinet is meeting today trying to figure out the Conservative tactics, and the Shadow Cabinet also meeting this morning to try and figure out the Labour tactics. The House of Parliament opens at around midday today. They'll have potentially 6 hours of day. Even later than that, potentially the bill will be voted on. So we could see another one of these late-night decisions that are pivotal for British politics.
Well, I'm sure you'll be staying up to cover it. Good luck with that, Dylan. Thanks very much. European leaders have bid farewell to Mario Draghi in a collegial ceremony at the ECB headquarters. Draghi officially handed over a symbol of office, a golden bell used to call central bank policymakers to order. And what I'm reading is that it's a replica.
To be honest, it reminds me of the last orders bell that a lot of pubs used to have here in the UK before they changed the licensing laws, and it feels a little bit like last orders for monetary policy at this point,
the worst sound you can hear in a pub when you're really sort of hitting a stride.
Well, that's an insight into your social life, Karen. I'm not sure that we would necessarily agree with
maybe that's how some investors feel about all the easing that they've had. They want more, and the sound of that bell could be quite negative for them. Right. Anyway, as we push on, former IMF Managing Director Christine Lagarde officially takes over the presidency on Friday. French President Emmanuel Macron said Draghi's legacy went beyond policy.
What you are passing on to us, dear Mario, is the torch of European humanism. By saving the euro, you ensured and fortified the protection of Europe and of its peoples. From now on, this way that you trace, this humanism, which during 8 years was seen through your concrete actions, are up to us. And I know that the President-designate Christine Lagarde will take over in a few days, and she knows the place and the importance of this legacy. And I also know the importance that she attaches to independence and to the responsibility that is linked to this. And I know that she will make sure that she can also leave her mark in this institution.
Incoming President Christine Lagarde reiterated she would continue Draghi's steadfast commitment to the common currency.
The euro does not belong to you, you know that. It does not belong to the ECB, however well it serves it. It belongs to them, to the people of Europe. And we are merely stewards on their behalf. As we both know, we're just passing through.
Let's get out to Annette for more in Frankfurt. Annette, we're just discussing whether it's the last round for negative rates and quantitative easing, whether we're now going to see a dramatic shift under the leadership of Christine Lagarde.
Well, most likely not, because the mandate of the ECB is to get inflation back to its target of close but below 2%. And if you look at inflation, it's nowhere near it. So to put the foot off the pedal here would probably not be a wise decision given the potential adverse market reaction. Having said that, what Christine Lagarde is going to do is a strategic review of the monetary policy tools and also the mandate of the ECB. So there will be working groups inside the ECB assessing how effective the tools are and whether it's necessary to keep them as well, especially when we talk about negative rates, because there is not a lot of agreement in the world whether they are working or not, whether they do more harm or good. I guess we have to wait and see what the ECB working groups are coming up with in terms of which tools are good and which are not. But I think Christine Lagarde has a Herculean task to actually reunite the Governing Council. We all know that the September decision to reinstate quantitative easing was highly critically received by many member states, especially Germany and the Netherlands. Like the Northern Hemisphere doesn't really like the idea of reinstating quantitative easing and voiced very loud concern, unusually loud and public concern and dissent when it comes to that decision. So Christine Lagarde has to sort of reunite and form or reform a team which is working and perhaps appease those critics as well in the Governing Council. I caught up yesterday with Jörg Asmussen, who was once upon a time also a member of the Governing Council when at the time when Mario Draghi uttered the very famous words, whatever it takes, and I asked him what he thinks which shape the ECB is in and what Christine Lagarde will inherit when we talk about like the ECB. Take a listen.
She is probably the best choice that one could have taken to run the ECB after Mario Draghi. I mean, she is outstanding in team building, in communication. So she will handle the situation. It appears indeed from the outside that the Governing Council is divided. So maybe she will spend the first real task in team building. And then my expectation is that she goes out and really interacts very actively with the German public, or let's say also the Dutch public.
Why is it, in your view, that the German public is so especially critical of what happens inside the ECB currently?
It has a bit to do with the history of the German central bank. I mean, my experience is that citizens inside the euro area have very different expectations what they expect from their central bank to do. I mean, if you look at what is happening in the Netherlands or in Germany, they say, oh, they're overstepping their mandate, they're doing too much, whatever. If you look at, let's say, citizens in Italy or Portugal or Spain, they're saying, oh, they leave us alone, they don't act as our central bank. So history has very much shaped what citizens expect from their central bank. That makes the ECB task, being the central bank for 19 different countries currently, so difficult.
I think we're in for interesting times because the market and we all will have to try to read Christine Lagarde, also her communication style going forward, in order to assess what she's really going to do in terms of monetary policy going forward. But I think one thing is clear, that she will not just sit on what she inherited from Mario Draghi, but will try to do something more active also quite soon, I guess. That strategic review is about to start, as I'm hearing, still this year. So we're going to probably see some actionable conclusions as early as perhaps early next year or so, and then perhaps also some changes in the monetary policy toolbox. With that, back to you.
Annetta, thank you very much. In other news, House Democrats will hold a vote on Thursday on how to make the Trump impeachment hearings public. Meanwhile, a key witness in the inquiry has refused to testify and has asked a judge to intervene. NBC's Susan McGuinness has more.
A key witness in the impeachment inquiry against President Trump, a no-show on Capitol Hill.
This is deeply regrettable. He was compelled to appear by a lawful congressional subpoena.
Former National Security Advisor Charles Kupperman was on the now famous phone call President Trump held with Ukraine's leader when Mr. Trump asked President Zelensky to investigate former Vice President Biden and Biden's son, as well as a conspiracy theory alleging 2016 election interference came from Ukraine and not Russia. The president continues his denial. barrels.
We had a very good conversation with the Ukrainian president. The conversation was perfect.
Kupperman has gone to court to fight the deposition. House Intelligence Committee Chairman Adam Schiff says it's not helping the president's case.
They believe that his testimony would be incriminating of the president. It is also, I think, very plain, additional and powerful evidence of obstruction of Congress.
The president today attacking Chairman Schiff.
He's a corrupt politician. He's a leaker like nobody's ever seen before.
This president is not only innocent, but he certainly has not done anything impeachable, and it's time that we bring this charade to a close.
On Thursday, the House holds its first formal vote on the impeachment inquiry. House Speaker Nancy Pelosi says its purpose is to remove all doubt as to whether the Trump administration may withhold documents, prevent witness testimony, or continue to obstruct the House. One more key witness in the investigation, National Security Council official Tim Morrison plans to testify on Thursday, even if the White House tries to block him. In Washington, Susan McGuinness, NBC News.
Coming up on the show, Alphabet sees costs rise in the third quarter, driving shares lower. More on that when we return.
Even after you clean, odors are still trapped in your fabrics. Febreze fabric eliminates those odors.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hurry to TradePoint. 3 for 2 on flooring and tiles ends this Sunday. Plus, if you have loyalty discount, you'll get this on top. Don't miss 3 for 2 on flooring and tiles at TradePoint. Excludes cut-to-measure flooring, flooring accessories and underlay. Every third item per single transaction in descending price order free. See tradepoint.co.uk.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Or crime dramas, I've got loads. And they're never going to guess who did it. Or how about thrillers? They're going to be on the edge of their seats with these. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
The Peugeot Professional Van range is the beating heart of businesses across the UK. Whether you're on the road with only your DAB radio for company or navigating tight spots with rear parking sensors, all Peugeot Professional Vans give your business that edge. Visit your local Peugeot dealership during our October van event from the 10th to the 31st of October and drive away with an exclusive finance offer. Master the impossible. Peugeot Motor Company PLC is acting as a credit broker, not a lender. Finance subject to status. Terms and conditions apply. Business users and over 18s only. Guarantee may be required. PSA Finance UK Limited.
Swinging a long drive, left field, he's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium. Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand, anytime, anywhere, all season long.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Saudi Aramco could announce the highly anticipated launch of its IPO as soon as this weekend. So says Reuters. The oil giant will make a statement on Sunday detailing its listing on the domestic market, the Tadawul. Within weeks, apparently, that will come after a number of delays. Local broadcaster Al Arabiya has reported Aramco will then begin trading on December the 11th. Speaking at a conference in Riyadh, the head of the Saudi Sovereign Wealth Fund, Yasser Al-Rumayyan, who also was also recently made chairman of the energy company, said the deal is attracting institutional cash.
We will have more and more shareholders from, institutions, retail.
Anything more to add on that?
Thank you very much.
Shares in Tiffany closed the session more than 30% higher after the jeweller confirmed it has received a non-binding all-cash takeover offer from LVMH of around $14.5 billion, and LVMH stock still bouncing in trade today.
Alphabet shares fell in after-hours trading as Google's parent company reported its highest ever quarterly costs. Expenses over the third quarter were driven by a hiring spree and increased investment in services. Elizabeth joins us now with more detail on these earnings. Elizabeth.
Hey, Juliana, that's right. It was a miss on the bottom line from Alphabet, Google's parent company. Earnings per share came in at $10.12. That was compared to an estimate of $12.42, so a pretty big miss there, mainly due to these higher costs, more investments going into certain things like data centers, headcount. We'll talk a little bit about that in a minute, but the revenues were very strong, $40.5 billion. That did beat expectations, and that was largely driven by the advertising business. We know that advertising still makes up a majority of Google's sales, and you can see here $33.9 billion in the third quarter, 85% of revenues overall. So strong growth in that ad segment. The company pointed to particularly strong growth in YouTube as well as search, which are its key core platforms. Now, in this other revenue segment, that's where the investments are coming from. Things like data centers, things like its hardware, its phones. The new Pixel 4 phone was out in the third quarter, so Google's saying it's hoping, of course, for strong sales there. And that's where this other segment is coming from. We also have the other bets, which is the kind of moonshot ventures, small slice of revenues there so far, and actually still reporting a loss in that business, but ultimately is the kind of expansion outside of the core business, and that's certainly getting a lot of attention, at least from analysts as they try to understand Google's push outside of its core business, outside of that ad platform, into some of these other ventures like hardware in the broader ecosystem, guys.
Elizabeth, why don't you come over and join us at the desk? And I want to pick up on the point you made about the fact that, yes, the majority of Google's ad revenue comes from advertising, but they're making a huge push into other ventures. And one, cloud in particular, a very, very high margin business. You focused a lot on that part of Amazon and Microsoft's businesses. What did we learn from Alphabet yesterday on this front?
Not a lot of new numbers on cloud. We heard a lot of optimism from Google CEO Sundar Pichai about this business, how they're continuing to get a lot of clients. All we know from a numbers perspective was what they disclosed last quarter, which is that there's an $8 billion run rate for that business. So about, $2 billion, say, in revenues a quarter. And that is significantly still behind the key competitors, Amazon and Microsoft. So there's no denying that Google is trying to gain traction here. We know they want to gain traction because cloud is a high margin business, like you mentioned, but it's going to require some investments in order to get there and in order to catch up with the others.
Should we talk about Fitbit?
Yes.
We saw lots of rumours and lots of chatter in the markets that Google's going after Fitbit, that wearable device that investors sort of question how much more mileage there could actually be for a wearable like that. But it would put Google in direct competition with Apple, given the Apple Watch.
Absolutely. And this was such an interesting story. We've heard a lot of rumors that Fitbit is sort of a prime acquisition target from these tech companies because it does have a pretty loyal following of users who rely on it for all-day activity, sleeping as well. And essentially what Google would do here is license, its wearable technology to Fitbit users. I mean, in addition to trying to expand its own hardware portfolio. And we heard in the earnings call last night, Sundar Pichai, the CEO of Google, emphasizing how they want to continue to be involved in the user from day to night. So that could be in a wearable, it could be in your Nest device, in your Google Assistant, or it could ultimately be in your driverless car in your Waymo. So the point being, when we hear it from a lot of the other tech companies, we talk a lot about how, for example, 5G will affect this. Every part of that will be kind of controlled by Google and the battle for kind of your home and that full ecosystem there.
So if we break out the various divisions and have a look at YouTube, how's that doing compared to the overall business?
I wish I could tell you exactly how YouTube is doing. Unfortunately, we don't get those numbers. But look, we know that the ad sales are strong on YouTube. That's what they said. Right. No clear numbers behind that, which is a big frustration for journalists and analysts too.
And you see the analysts saying, give us some predictability.
Yes. Absolutely. No, and we get it, we get it from some other companies a little bit more clearly. We know that other companies are investing heavily in streaming, in original content, and we heard that that's happening from Google. We just don't exactly know how much and what the payoff's going to be.
And on that, Elizabeth, thank you very much. That wraps up the programme. Thank you for tuning in to Squawk Box this morning. Worldwide Exchange coming up right after this. Bye-bye.
this 12-footer for his first victory? Does he have what it takes?
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Millions of people are missing out by having a current account that doesn't pay them any interest on their hard-earned money. TSB offers interest to all their Plus account customers for no monthly fee. Plus, you can stop your friends and family missing out by recommending the Plus account to them. And when they switch, you'll both earn £75. Search online or visit your local branch. Terms and conditions apply.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want documentaries, I got ones about space, sharks, or superstars. Horrors, no problem. It's not real, it's not real, it's not real. Or how about dramas? I've got Emmy-winning shows. Oh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Trick or treat!
Oh, sorry, this is a Vauxhall Network Q retailer.
But your sign says no tricks, just treats.
Well, yeah. Treats like a £1,000 deposit contribution on an approved used SUV at 9.9% APR representative.
I'm telling my mum.
Well, get her to hurry. Offer ends on November the 4th. And don't forget our 1-year warranty and roadside assist. No tricks, just treats. Search Network Q. Because buying a used car shouldn't be scary. Personal contract purchase, subject to status, T's and C's apply. 18 plus only, Vauxhall Finance.
The S&P 500 finally breaking back into record territory. It's the 14th time this year it's done it. Trade war, olive branch, maybe the White House considering yet another show of good faith to China as trade talks continue. Muhlenberg in the hot seat. 1 year since the first fatal 737 MAX crash, the CEO of Boeing will finally face lawmakers on Capitol Hill today. Overcooked, shares of Beyond Meat getting burned despite turning its first profit ever. We speak with an investor who jumped in early. And Hollywood outrage over a possible new Netflix feature that will help you binge watch all your favorite shows in hyperspeed. It is Tuesday, October 29th, and Worldwide Exchange begins right now. From wherever in the world that you may be watching, I am Brian Sullivan. Thanks very much for joining us on this busy Tuesday morning. And the chart to watch today is Beyond Meat. Shares, they are down about 9%. They've come off their lows after hours, posted their first profit ever as a public company. But the market wanted more. We saw shares fall over 10%. They've come back just a little bit, but still, Beyond Meat, certainly a stock to watch, down 9%. As we noted, an early investor will be your guest here in just a few minutes. So Beyond Meat is a big story, certainly right now. Now we've got some breaking news, a double dose of breaking news in the energy space as well. New reports in the last hour that Saudi Aramco reportedly finally aiming to price its anticipated IPO. This will occur on December 4th, and then the stock will begin trading in Riyadh on December 11th. All of this coming out of Saudi-owned state TV Al Arabiya. We're going to have more on this big story as it develops throughout the day here on CNBC. Now, separately, the Wall Street Journal is reporting that Marathon Petroleum may cave to investor pressure and spin off its Speedway gas station chain. The paper also reporting CEO and Chairman Gary Heminger may be replaced. The situation on Marathon is fluid. It's still up reversing course. We have no trade. That's Marathon Oil. The correct ticker is MPC. That is Marathon. But there's two Marathons. Can be a little bit confusing. MPC is the one that we're talking about. Marathon Oil and MPC oftentimes confused. All right, let's get back now to the markets. The S&P 500, as you might have heard about on this fine network yesterday, coming off its 14th record close of the year. The Dow still a little more than 1% away from its all-time high this morning. We're seeing futures. Listen, it's Tuesday. It's kind of spitting rain here in the Northeast. We'll call it flat. We'll be a little generous this morning. Long way to go. What about the bond market? Well, yields, they're still down. In fact, mortgage rates still very low. And we're going to talk about housing coming up in a couple of minutes here on CNBC as well to see if that number, that 1.83% and a 3.5 to 3.75 mortgage is encouraging more home buying or home remodeling. Here's a hint. It is. All right, let's go around the world now and see how the Asian markets finished up their night as well. Japan, red hot market. Japan, one of the hottest markets in the world the last couple of months. Another 52-week high for the Nikkei 225. China flat to slightly down. And in the European trade again, not a lot of trends here. The Nikkei really has been the only market besides ours in a trend. We're seeing slight down moves for the European markets this morning. All right. Optimism around trade progress certainly is really the keys to this story here, and that has been really the market moving thing. And Eunice, it's always great to see you on. It's 5:03 here, whatever time it is, 7:30 p.m., 4 a.m. there. I have no idea. Tell us where we stand right now in the U.S. Tell us where we stand in the U.S.-China trade talks, if you don't mind.
Well, I am 12 hours ahead of you. But besides that, the U.S. Trade Representative's office has said that it could consider extending tariff suspensions on $34 billion worth of Chinese goods. So these suspensions are set to expire on December 28th. And companies have from November 1st to the 30th to pitch why their products should be exempt again for another year. So already 1,000 products, including cell phones and stainless steel, have been excluded from a 25% tariff that had been imposed the previous July. So Beijing would very likely welcome any more of these exemptions. Beijing has been demanding that additional tariffs be removed as part of this trade deal. And over the weekend, it confirmed that some portions of the text of a Phase 1 agreement had been completed. And then today on state TV, there was a commentary that was featured saying that President Trump's remark that a deal could be, quote, ahead of schedule before the APEC summit is, quote, realistic, though not guaranteed, of course. Tensions are still there. The Foreign Ministry was very critical today of the FCC's decision to hold a vote on November 19th to determine whether or not Huawei and ZTE, the Chinese tech giants, are, quote, national security risks. And the reason why they did that was because that designation would block U.S. companies from tapping an $8.5 billion fund to buy gear from Huawei and ZTE, Brian, as they try to build out the rural parts, the telecoms infrastructure for rural parts of America.
Eunice, always a pleasure. We'll see you soon. Have a good night. Thank you. Well, despite the optimism around what Eunice has talked about, trade as well as earnings coming in okay, your next guest says investors may be ignoring some warning signs overall. Let's bring in Potomac Wealth Advisors President Mark Avalon. Mark, it's good to see you this morning. Do you think that the markets have gotten ahead of the fundamentals?
I think the markets are looking for the better side of the story that's been unraveling. It's really been a mixed picture with earnings, and we're only looking at the upside surprises. I think what we're ignoring is that there's negative earnings growth and a legitimate chance for an earnings recession. The good news is priced into the market. I think people think we're going to get some sort of trade deal which tones things down. But what we're forgetting is this whole trade dispute has caused tremendous uncertainty in the market. Capital expenditures are down. The PMI index still remains in a neutral zone. There are a lot of warning signs from business. The labor market is starting to slow. Hours worked. Wages are peaking at this point. And I think there's enough signs out there that tells the investor, hey, hey, we're not suggesting there is a crash, we're not suggesting there's a recession, but I wouldn't think that this is a totally rosy picture for stocks.
Does that mean the overall markets are overpriced, Mark?
Yeah, historically, when you have a forward earnings multiple greater than the average, and the average is in the high 16 range, right now we're in 17, low 17 range, the next 5 years of returns are quite muted. There's no exact timing on when you're going to begin to have a period of relative underperformance, but when markets are fully or fairly valued, the best days of the bull market are behind them. Again, it doesn't mean you can't eke out a single-digit gain in 2020 and keep your money allocated as you are now. But the best years of this market are definitely looking like they're behind us. And I think the recent activity of the past week only spells optimism.
Okay, is there any part of the market that you do like, Mark?
Well, I think you have to stay with defensives. If you think that GDP is now going to start to have a one handle and it's slowing, if you think Europe's going to remain weak, and we do, and if there's continued uncertainty, remember, people say, well, if we get a China trade deal, there's no uncertainty. Look, that China trade deal, if it happens, is going to be within 12 months of a U.S. election. So the entire 2020 cycle is going to have tremendous uncertainty, especially with some of the competing programs that we've seen. So we would stay defensive. The consumer is still relatively strong. Consumer staples have done very well. We think that real estate and healthcare and where money goes when there's uncertainty is not overpriced, and we would continue to look there.
Got it. Real estate, healthcare, but the overall markets, you have been warned, and we appreciate it. Mark Avalone, thank you very much, buddy. Have a great day down there in D.C.
Good to be here.
All right, when we come back, there is good, there is bad, and as the movie said, there is downright ugly. And we're going to reveal the name to watch. That is your mystery chart. Bad sales, worst guidance. Plus, why the motherland, Ireland could be the big winner when it comes to Brexit. Did you know it's got the hottest economy in Europe? Well, you do now, and we're going to speak with somebody about it next. And later, Uber revealing its next-generation delivery system. Here's a hint. 6 propellers, no wheels. It's for your burger, not you. We're back with the story coming up.
How are you so calm?
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want documentaries, I got ones about space, sharks, or superstars. Horrors, no problem. It's not real, it's not real, it's not real. Or how about thrillers? They're going to be on the edge of their seats with these. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Trick or treat!
Oh, sorry, this is a Vauxhall Network Q retailer.
But your sign says no tricks, just treats.
Well, yeah. Treats like a £1,000 deposit contribution on an approved used SUV at 9.9% APR representative.
I'm telling my mum.
Well, get her to hurry. Offer ends on November the 4th. And don't forget our 1-year warranty and roadside assist. No tricks, just treats. Search Network Q. Because buying a used car shouldn't be scary. Personal contract purchase, subject to status, T's and C's apply. 18 plus only, Vauxhall Finance.
How can I help you?
Just a latte, please.
Grande. Guatemalan bean.
Oh.
Hazelnut syrup.
Wow.
Whipped cream.
All right.
That's $5.25, please.
Oh.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount to the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
NFL fans, hear every live game on TuneIn Premium.
He does to the right, throws to the end zone, caught by Fells! 15, 10, 5, touchdown Green Bay!
This Thursday on Halloween night, hear the home and away call as the San Francisco 49ers visit the Arizona Cardinals at 8:20 p.m. Eastern.
Back, what a block! Touchdown for Kevin Coleman going the other way! Touchdown!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Swinging a long drive, left field, he's got one now! Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium.
Well, as we learned yesterday, the UK has reset the clock, agreeing with the European Union to extend the Brexit deadline now until January 31st, unless they come to a deal before that. That still leaves uncertainty, though, for those that do business with England. But if and when Brexit finally happens, what happens to companies looking to stay tied to the EU? Many will move to Ireland or already have. Ireland's economy, the hottest in Europe, cranking along at 8.2% last year. And by the way, Ireland has the youngest population in all of Europe. Joining us now is Martin Shanahan, CEO of IDA Ireland, the agency responsible for attracting foreign direct investment to his country. Martin, it's good to see you again. Thanks for joining us.
Thank you, man.
So do you have a view on Brexit? I mean, you must, obviously. You're watching. Your country is tied to it in many ways. Will it happen?
Well, it's not going to happen in the next couple of days, which was the next milestone, obviously. So we're now going to have to wait and see, will it happen before the 31st of January? I mean, I think from an investor perspective, Brexit has equated to cost and disruption. It has created uncertainty. As you mentioned in your intro, we've seen a lot of investment into Ireland as a result of it. Over 80 companies have identifiably moved functions to Ireland because of Brexit. Mainly financial services, but also pharma and medical technologies, anything touched by regulation.
How much of those moves do you believe are directly because of the Brexit threat versus just they want to be in Ireland, 12.5% corporate tax?
Well, I think there's a couple of things there. Firstly, we've had an extraordinarily strong run of investment for over the past 5 years. So even pre-Brexit, extraordinarily strong run of investment. And that is because of a lot of things, including a very consistent, transparent, competitive corporation tax rate. But also it's the availability of talent. In fact, we have access to a European labour market of 200 million people. You mentioned that we have one of the youngest labour forces in the OECD. So all of those things are contributing to making Ireland attractive. So it isn't just about Brexit, but obviously Brexit created, for some companies, an existential threat. They're trading into Europe and they needed to continue to trade into Europe, and therefore they had to choose another European location.
And I think you've been so attractive on the tax rate side as well as saying, and you are clearly tied to Europe, right? There's no question.
Absolutely no question.
The Irish exit is a separate term, as we know, just disappearing from a party, but is there a risk of an Irish exit?
None. That is the one thing investors can be absolutely sure on. Regardless of what type of Brexit we have, we're going to continue to be part of Europe. Investors who are based in Ireland can continue to trade into Europe, and the support for the European Union in Ireland is really high. Over 90% popular support for the European Union, so there is no prospect of a...
How does a lowered corporate tax rate here impact your competitiveness?
Listen, all countries change their corporation tax mix from time to time. So anything, if you lower corporation tax in one country, it makes that country more competitive. I think, though, people maybe read too much into the corporation tax piece. I think it's the stability of the corporation tax rate that has benefited us. The fact that companies know exactly what they're getting if they invest in Ireland. And there are a lot of other things that you have to be able to do.
You don't have politicians there saying, let's raise the corporate tax or re-raise the corporate tax rate.
No, we have extraordinarily, I think, centrist politics. The two parties that have governed the state since its foundation alternately have pretty similar pro-enterprise policies. So there is no prospect, I think, anytime, and certainly the current government had been extraordinarily clear that there's no prospect of adjustments.
So who's your competitor? If I'm a company, Google, JP Morgan Chase, Apple, many of the companies based there, or maybe companies looking to go, and we're talking about maybe dispersing our headquarters, is Frankfurt your competitor now? Is it still London? Is it New York?
I think all of the above. I mean, I think some companies have looked globally and said, well, where do we want to regroup to? I think the UK remains a strong competitor. And I believe, regardless of what happens with Brexit, will remain a strong competitor. It has benefited significantly from inward investment into Europe. If you look at kind of independent analysis as to where financial services, Brexit-related investments have gone, Ireland tops the table and Frankfurt is second.
Just quickly, I'm going to ask you to opine on your economy, if you don't mind. Because you guys got hot, then you got overstated in real estate, then you kind of got really cold. You're hot again. Are you making the same mistakes that you guys did last time?
I don't believe so. I mean, certainly our ambition is sustained growth. So, not up and down, we want sustained growth. I think we're making the right decisions. I think we're making the right investments. And we have, I think, a really good proposition for investors.
Martin Shanahan, IDA Ireland, you guys cranking on all cylinders.
Yes.
Martin, I hope to see you over there. Thank you.
Thank you very much.
Take care. Have a great day. All right, on deck here on Worldwide Exchange, a rare earnings stumble for Google as those shares on the rails a little bit this morning. And later on, Facebook dipping its toe into trying to help you stay healthy. Will you like this story? You got to stay tuned to find out. Dow futures down 23, and we're back right after this.
When you look at the world,
just because you travel doesn't mean you can't keep your routine. The more obstacles travel puts between us and our well-being, the more we strive to work well. At Westin Hotels and Resorts, we're focused on empowering your well-being. With Westin meetings, you work and feel your best with nutritious snacks and nourishing smoothies that give you the energy you need to power through any meeting. Don't leave your well-being behind. We give you the choice to get up or to rise. Search Westin online to find out more. Westin, let's rise.
Oh my God, OMG. Is she okay?
Yeah, she always does this. Her Uber Eats just arrived. She ordered McNuggets, so...
Oh. Shall I get the door then?
Probably best, yeah.
McDonald's delivered, exclusive to Uber Eats. Get excited.
People have always told me I can be a bit wary of modern things.
Very true.
So when Jane suggested selling the house with purple bricks, I weren't happy.
No, you weren't.
You see, I don't like technology. I don't like the internet. I don't like moving house. I don't like their adverts. I don't like purple.
Luckily, I don't listen to him, and our estate agent Emma were perfect. She gave us her actual mobile number. She was always available.
Fine, they were great. Still don't like purple.
Purple bricks. You'll be totally sold.
Fixed fee payable on instruction or after 10 months. Viewing services cost extra. See website for more details.
Get the brands you love at littlewoods.com. Nothing beats a winter night in with the family and a box set. Get the LG 4K 43-inch TV with HDR for an unmissable $369. All with inclusive delivery and free returns. Hurry, offer ends 7th of November. Own it. Shop now at littlewoods.com.
I spy with my little eye something beginning with B.
Bike.
Nope. Banana tree.
Oh, of course. We must have missed it.
Although you might not be able to see it, your small actions can have a real impact with Shell. Drive carbon neutral by filling up and using Shell Go Plus today. Make the change. Drive carbon neutral. Shell. Go well. See goplus.shell.com/CO2 for details.
We don't do it every day or every week, but when you got earnings season on, all these stocks rolling out with their earnings, you got to do the good, the bad, and the ugly. So let's do it and get a check on some of the stocks on the move today. First, the good. Mirati Therapeutics. That stock up 14% right now. Clinical data from an early stage trial shows one of the company's experimental drugs shrinking tumors in patients with advanced lung and colorectal cancer by as much as 40%. That's good news. Stock also reflecting that at 14%. Next up, the bad. Alphabet, Google. Shares are down after earnings missed forecast. Company reported that ad sales did drop, but costs continue to pile up, rising faster than revenues as it invests in new businesses like consumer electronics and the cloud. Google shares down about 1.5%, not a huge move. But finally, the ugly Grubhub. Shares sliding more than 30%. Ouch, 32% to be exact. Grubhub reporting disappointing results, gave a weak outlook. Now, Grubhub blames promiscuous diners, saying more of its customers are now using multiple food delivery apps. So just to be clear, they're talking about people using multiple apps. Just want to make that clear. All right, straight ahead here on Worldwide Exchange, wildfires, they continue to rip across California, and the massive Kincaid fire in Northern California continues to burn. New fires emerging overnight. LA, still parts of it up in flames. We'll get a live report on this big story when Worldwide Exchange returns right after this.
For farmers here, whatever job you're searching for, you can find it on LinkedIn.
First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
There's It's a Tuesday Morning happy. Listening to a banger happy. There's no traffic on the M1 happy. Kid-free this weekend happy. There's only 57 days until Christmas happy. It's first coffee of the day happy. Getting your car fixed before work happy. You get that kind of happy from QuickFit in Watford. Book on your mobile now at quickfit.com and drive away happy. Terms and conditions apply.
All right, welcome back. It is 5:23 here, 2:23 a.m. out west, and we have got a developing story overnight as numerous wildfires continue to rip across California. The massive Kincaid fire in the northern part of the state continues to grow as state utility PG&E plans for more blackouts for today. You've also got fire or numerous fires in the LA area, which is where we find NBC's Jay Gray, who joins us now from Los Angeles. Jay, I know a bad scene, high winds, a lot of heat. What's the latest?
Yeah. Brian, I want to give you an update on the situation here right now. Over the last 30 minutes or so, a flurry of activity. We've been pushed down the hill, teams moving in on the ground. From the air, they've been dropping water about 100 yards or so behind us. Flare-ups in this area that's already really burned out at this point. Devastation stretching for miles. And as you talk about, these are the fires here in the Los Angeles area, but there's a string of fires that stretches all the way through wine country, and they continue to burn out of control. You've got hundreds of thousands of people evacuated. Those who still are in their homes, many are without power. You've had more than 100 structures burned, and all of those numbers are expected to go up, according to officials here. They've got a bit of a dip in the winds overnight moving into today, but those winds are expected to pick up again late in the week. So fire teams trying to make any progress they can right now, understanding that Mother Nature is coming back fiercely toward the end of the week again when those winds will pick up, and they'll be dealing with a much different animal.
Yeah, Jay Gray, we're watching some of the video now. That is a tough scene, and these firefighters and first responders, they are indeed very brave, because those are fast-moving winds. Jay, be safe. Stay on the move if you have to. Thank you very much, Jay.
Yes.
All right. Well, utilities remain in the crosshairs of this terrible story. PG&E's stock hit hard the last couple of days, collapsing yesterday as concerns mount about potential liability and blackouts. Remember, PG&E has been operating in bankruptcy protection since January, and wildfire costs would likely cut into bondholder recoveries. That's why you're seeing many of these utility bonds as well as stocks sell off. Other utility stocks to watch in this story include Edison International and Sempra Energy as well. All right, still to come. Putting the bull market into perspective, why Wall Street still has a ways to go if it hopes to really rewrite the record books. It's your story of the day, perhaps, from a historical perspective. We're going to make you more smarterer coming up after the break.
Listening and observing are critical skills for scientists at 3M.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Or crime dramas, I've got loads. And they're never going to guess who did it. Or how about documentaries? I've got ones about space, sharks, or superstars. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus. Month passes auto-renew. Terms apply.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Swinging a long drive, left field. He's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues tonight with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Team, the 49ers are undefeated and halfway through the earnings season. Have the numbers for the markets been that hot? Captain Earnings, Dom Chu is here with your scorecard and all you need to know. Why isn't anyone building houses anymore? An industry insider here for just how hot the home renovation market really is. And Boeing CEO in the hot seat. He is headed to Capitol Hill. He'll face tough questions on the safety of the 737 MAX jet. Can he keep his job? It is Tuesday, October 29th. The Worldwide Exchange rolls on right now. Welcome back here. 5:29 on the East Coast. If the chili peppers can't get you going in the morning, I'm not sure I've got anything for you, friends. I'm Brian Sullivan. Thanks very much for joining us. Here's how your money and investments look as we are halfway through the 5 a.m. hour right now. Stock futures, they're down a bit. The Dow down 32 points on the futures, but again, long way to go. Lots of earnings still to come. The S&P coming off, by the way, its 14th record close of the year and new records for the overall market. The Dow, if you're keeping track, and you probably are, still more than about 1% away from its own record high. The bond market not moving much. Benchmark 10-year yield still right around that 1.8%. So now that we are finally at a new record high, it's a good time to put this amazing run into more context. And who better to do that than our good friends over at Bespoke Investment Group. We are now day 3,885 of this bull market, which officially began on March 9th of 2009. But incredibly, this run, as long as it is only the second longest of all time, and by a long shot. According to Bespoke, the longest bull market ever was the record run from 1987 to the year 2000, just before the NASDAQ bubble popped. That run, 4,494 days. The Dow, when it began, under 2,000 at the time, and gained 582% without having a 20% drop on a closing basis ever. That record, maybe like Lou Gehrig's, may never be broken. And then there's this run, of course, which would have to go until, get this, June of 2021 to tie that record. Another year and a half. The third longest bull market of all time, post-war 1949 to 1956. Some great historical context on just how far we've come and just how far we still need to go to really break the records. Thank you, Bespoke. All right, some more perspective. Today marks the halfway point of the earnings season. 150 S&P 500 companies reporting this week alone. Dom Chu joining us now with a look at how the results have come in. Have they come in, Dom, more like the 49ers or more like the Browns?
You know, it's all about expectations. I think the 49ers are good because they came in with relatively low expectations, and now they're 7-0 and they're undefeated. So things look pretty good. This earnings season, as is every earnings season, is all about expectations. And Brian, you mentioned those 150 companies in the S&P. By the way, 6 Dow components are part of that constituency as well. As you can see behind me, no shortage of big corporate catalysts for what's going to happen during earnings season. Remember, this is going to be a big day as well for energy earnings with BP and ConocoPhillips. So all of these names scheduled to report, and of course, Exxon and Chevron on Friday. The reason why it's important, you mentioned that halfway point. We are just about there. If we tally up everything from last night after the close and whatever's going to come out this morning by about 2 or 3 hours from now after the count is all done, we should see that halfway point. But just to get you an idea of what we're looking at, with about 204 companies in the S&P 500 reporting, according to data firm Refinitiv, you've got a nice beat rate. 78% have beat analyst estimates, 6% have met, and 15 have missed. So generally speaking, that beat rate pretty good and just about in the same line as historical context. Now remember, earnings expectations have been coming down quite a bit. If every company reports as expected for the rest of earnings season, you could see blended earnings growth come in 2% lower. So that's kind of where we've been kind of eyeing things out. Meanwhile, blended revenue growth, if every other firm reports, is expected up 3.5%, 3.3%. So, Brian, things look pretty good generally speaking, but it's because those expectations for this earnings season have been coming down so steadily over the course of the past few months that it's easy to beat those lowered expectations.
Beat the lower expectations. We got it. All right, that's overall. What about sector by sector? We know energy's a dog. Who else is doing well and who's not?
All right, so you mentioned the energy. Now, if the energy sector was stripped out, you'd actually see modest earnings growth in the S&P 500, and there's a reason why. Because if you take a look at this, energy is expected to drop by nearly 39% in terms of earnings growth. The other big drop here is materials, and then technology itself is down about 5% as well. Those represent the biggest drags. The two biggest, at least, tailwinds for earnings season, real estate and healthcare, both slated to go up by about 5%. So those are the outperformers, underperformers with regard to earnings growth. We'll see if that plays out for the rest of earnings season as we hit the halfway point. Brian, back over to you.
All right, Dom Chu, great stuff. We'll see you soon. Thank you very much, Dom. All right, now to arguably the most talked about stock in the entire market. No, it's not Tesla. It's Beyond Meat. Company turning its first ever profit as a public company, but shares down again in the pre-market, off nearly 10% and down from over 220 in late July. Concerned about two things driving the selling. Number one, more competition. Number two, more shares as a lockup expires. Let's bring in Greg Smith, founder and CEO of Evolution VC Partners, an early investor in Beyond Meat. Welcome back. Good to see you again, Greg.
Good morning. Thank you.
We're the media, right? So we focus on the fact the stock's gone from 220 to 90, which looks bad, but it also went from 25 at the IPO to over 90, where it is now, about a 250% gain. What do you think the stock's issue has been the last couple of months?
Look, I think there's been a big focus on the IPO lockup being released. It was released yesterday at 4 o'clock, so you have a tremendous amount of shares that might be available for sale. You have many investors that have incredible profits. Anytime you have a stock that's up 4x, at one point it was up over 10x when it traded over 230 back in July. The stock is off its high. You're going to have a certain amount of dislocation in the stock today as you have perhaps a turnover in the investor base. But how I look at it is markets are efficient. You look at the performance of this company. This is a company that last year they did 88 million in revenues in 18. And yesterday they reported a quarter on an annualized basis that was 368 million annualized for the quarter. Also you look at margins, they had almost 36% gross profit margins. When you weigh that against any other meat product in a grocery store, those guys are running at maybe high single digits. Maybe you look at a company like Tyson with 12% gross profit margins. So by every means and measure, this company continues to underpromise and overdeliver. They come out, they raise their guidance, and on a weekly basis, they continue to surprise people.
And one man's opinion, nobody cares. But I will say this, anecdotally, I've noticed their products now in the supermarket that I go shopping at, Beyond Sausage and some Beyond Meat. I'll keep an eye out for it. It wasn't there before. It is there now. Is that a good sign? Do you feel like distribution has expanded, or is it a bad sign because now it's available, which means maybe it's not as hot as it was?
This is not going to be a winner-take-all market. There's going to be more competitors coming on. That's another theme that investors are looking at. Who's going to be the other competition coming on? But right now, they're in now over 50 countries. They've expanded to 50 countries. The product, you look at, most people eating this product are reporting that they're flexitarians, which means that they eat everything. They're not just vegans or vegetarians. So you have a growing category here, and I think plant-based meat is here to stay. This is not going anywhere anytime soon. You've got healthiness and sustainability as the big trends driving the growth in this category.
I mean, you hear these analyst estimates, Greg, about the size of the fake meat
It's
market.
massive.
I mean, are they overstating it?
No, I don't think so. Look at
how do
real
they
meat.
know? How does anyone know how big the ultimate market is?
Look at the plant-based dairy category. It's grown to 13% of sales of dairy, of traditional dairy in the grocery store. So extrapolate that out, and if the meat market, the traditional animal meat market, is $1.4 trillion, start to play some what ifs. If plant-based meat can become 10% of that market,
$140 billion.
You're talking about a massive market size. Again, not a winner-take-all. This could be Coke and Pepsi, and you're going to have other competition.
And you're
coming
staying
on
in the
market.
stock. You're holding on. You're an investor. You're in. You're still in Beyond Meat.
This might be a little perverse. I'm actually hoping the stock pulls back today. I'd love to see it in the 80s. I think the fundamentals remain intact.
Because you'll buy? Because you'll add?
I would be a buyer in the 80s for myself personally, yes. I think the long-term outlook for this company is incredible.
All right, next time we have you on, we're going to talk about Beyond Shrimp, apparently.
Beyond Shrimp, I love
fake shrimp.
New Wave Shrimp is, New Wave Foods is a new company I invested in with Tyson Foods. That's going to be introduced in Q1. There's a lot of shrimp fraud on the market, and you'll see New Wave Foods introducing their product.
The title of this interview is going to be Shrimp Fraud. You realize
Shrimp fraud, 30% shrimp fraud in the U.S.
It's going to be pretty ugly, which is an oxymoron, like jumbo shrimp.
Shrimp is
Greg
the
Smith.
biggest seafood by a factor of 2, so look
Good
for
stuff.
that coming.
We'll
next
look for it
year.
next time. Greg, thank you very much. Greg Smith. All right, do not miss the CEO Beyond Meat live on Squawk Box this morning. That is 8 a.m. Eastern. Look at it. He's holding the Beyond Meat burger. He's got the